Welcome back. I want to talk about the use of levels in trading. By now, you'll know that I don't use technical analysis. I'm not interested really in those levels, but I do get asked by even Northern Method students, can we look at, for example, yesterday's low or this morning's low or Globex high, if it's the ES, for example? Can we look at those levels or those prices and sort of work out that there's going to be a lot of action around there, and therefore, we might be able to pick traders off? And I want to explain my views on that, and also, if you are exploring that avenue, what you need to consider. So from my perspective, I generally answer nowadays that I'm not really interested in that. There was a time where I might look at things like that. And again, with that idea that, lots of retail traders are going to play here. And because they're playing here, that could mean that I got some activity. The issue is, though, that the Northern Method, for example, it might give us dozens of trades a day. So really, we don't need to just wait for these kinds of areas. I don't want people kind of just looking and waiting and waiting and waiting and missing other chances just to see if these things happen. It's one big reason why I'm not a big fan of swing trading for day traders. But if you are someone that thinks, you know what, I don't want to trade 20, 30, 40 times a day, I only want to trade once or twice a day, I want to trade in that way, then this is a potential way of doing it. Of course, that's the whole point, is you have to understand, if you're going to use levels or prices like yesterday's low or yesterday's high, they might only come up once or twice a day. Now, I personally believe in the power of frequency. I think frequency has so many advantages. Look at my other videos and my Substack articles on frequency. I think it has so many advantages if you're trading in a more high frequency method, that I don't want to examine and try more low frequency styles of trading when I'm trading for myself as a day trader. I think the advantages are significant if you have a more high frequency method. But if you decide that you disagree with that, then these sorts of styles are going to have one or two trades a day. So that's one area that is something you might want to look at. As I say, from a Northern Method perspective, we don't need to use those because we get lots of other opportunities. But, and here's a really important point, if you're going to use these kinds of levels, the technical analysts out there will tell you things like, oh, if it breaks a low, it's going lower. If it breaks a high, it's going higher. You need to completely ignore that, because that just isn't the case. There's no evidence of that. And this is where the Northern Method and the ideas, the market making ideas that I give in the Northern Method, are still relevant, even if you're trading in these other styles. And that is that, let's say a market does approach today's low or yesterday's low or Globex high, if it approaches a low, for example, it may well continue to go lower if it goes through, but it may also go higher. What's important is what's happening at that moment, the context. There are times it goes down, there are times it goes up, and the same when it hits new highs and it breaks through certain highs. Sometimes it does go higher, but sometimes it also retraces. If you just have a view that, if it goes through that level on the upside, it's going up, that's a complete rule of thumb. That's what technical analysts tell you. But the history and the experience and the research says, it's often case 50-50. So where the Northern Method comes in, and the styles that I teach, is when you get to those areas, you still need to understand the context of what's happening to make good decisions. Sometimes it'll break through highs. Little traders will start buying there, and sometimes you'll go with them, and sometimes you're short into them. You need to understand the context of what's happening. So if you just try and have some sort of general trading rules, if it breaks the low, I'm selling, breaks the high, I'm buying, that's just going to put you in the same place as all those other retail futures traders and retail FX traders who just get, lose money constantly. You need to understand the context, and that never changes. So whether you're using the Northern Method to trade in a more high frequency style, or whether you choose to trade in a more lower frequency using these kinds of levels, to know that because you think that there's activity there, you still need to understand context. You still need to apply what's happening in the order book right now to make your decisions.